Chip stocks drove the market higher in the latest session, and the move was hard to miss. The Dow Jones Industrial Average climbed roughly 1,000 points, with semiconductor shares doing most of the heavy lifting. The Nasdaq moved higher alongside it. Three names stood out: Micron Technology, Intel, and Advanced Micro Devices. All three are closely tied to demand for artificial intelligence hardware and data center infrastructure, the physical equipment that powers AI systems. Each finished among the session's biggest gainers. That's not a coincidence. Investor appetite for semiconductor exposure has been a consistent theme this year, driven by the scale of spending on AI chips across the technology industry. But the rally was not uniform. Amazon, Walmart, and Nike all moved lower. That divide matters. On one side, technology and chips are being pulled higher by AI investment expectations. On the other, consumer-facing businesses, retailers, apparel brands, e-commerce platforms are facing harder questions. Households are still dealing with borrowing costs that remain elevated by historical standards. Credit card rates, auto loans, mortgages, they are all still high relative to where they were before the Federal Reserve began its rate hiking cycle. That is putting pressure on how much people spend, and investors are pricing that caution into consumer stocks. 1,000-point move on the Dow sounds large. In some ways it is, but context matters. The Dow trades at a much higher level than it did a decade ago, so point swings of this size occur more often than they once did. Measured as a percentage of the index's total value, the move reflects normal market fluctuation, not a fundamental shift in direction. The more important question is whether the semiconductor momentum holds. The chip sector is sensitive to a few key variables. Earnings guidance from major chip makers can move the group sharply in either direction. Export policy matters too. Restrictions on chip sales to certain countries have already disrupted parts of the sector, and the pace of AI investment by large technology companies is a critical input. If any of those companies signals it is pulling back on data center spending, chip stocks will feel it quickly. So the session's strength is real, but it comes with conditions. The market is essentially making a bet that AI infrastructure spending continues, that earnings guidance holds up, and that Washington does not tighten export rules further. Upcoming earnings reports will be the first test of that bet. Watch what the major chip makers say about forward demand, and watch whether consumer names can stabilize. The gap between those two parts of the market is telling you something about where the economy stands right now. This briefing is brought to you by First Financial News, clear, daily coverage of the economy and markets at firstfinancialnews.com.